Hello, everybody in Goa. It's a great pleasure to be with you once again. Unfortunately, not in person, but by Zoom. But the loss is mine. You are in wonderful Goa. This is the third conference hosted by SEA and TEFLAS, and I send my best wishes and my views on the market, which I'm sure are of great interest to you. So hang on with me for a second while I share the screen, bring up my presentation, and here we go. Three big conferences, as I said, in 1 year, and three major factors during this momentous year. 2022 saw the highest ever prices in world vegetable oils. We saw the biggest ever drop in vegetable oil prices. And we saw huge and probably the highest volatility in the market that we have seen. All this in 1 year, it has been quite a year. My starting point for today's presentation is going to be my last speech at Globe Oil, which was Globe Oil Agra in September. I won't go beyond that because you know already, and other speakers have pointed out the history of the market this year. At Globe Oil Agra, I forecast that the Bursa Malaysia would fall to 3,000 ringgits. It had already fallen to 3,400. I said it would fall to 3,000 by the end of September. And there would be a further fall to 2,500 ringgits by the end of 2022. Actually, that did not happen. The market rallied, and I will explain why. But at my last speech in Bali in November, at the GAPKI conference where I spoke in person, I revised my forecast. And I said that there will now be a trading range between 4,500 ringgits to 3,500 until early 2023. Why did I say that? Because during October and early November, soya oil futures rallied almost every day. They were rising by 1 cent per pound every day on the back of optimism that President Biden in the United States would come out with very strong biofuel mandates for biodiesel as well as for renewable diesel. Futures peaked at 76 pence per pound and engaged in what chartists call a double top. A double top is a classic signal that the market has topped out. And that is precisely the point at which doubts began to creep into the minds of the bulls. That is what I call the biofuel conundrum. Some analysts, first a few, then gradually many more, began to cast doubt as to whether the US EPA, the Environment Protection Agency, would impose much larger mandates for biofuels. Remember, this is a lobby war between the fossil fuel lobby, which hates biofuels and does not want a big mandate, and the agri-lobby, the agricultural lobby, which loves biofuels and wants a bigger mandate for biofuels. But we know from history that the fossil fuel lobby, concentrated in the states of Florida, Texas, all the oil-producing states, the shale-producing states, is much more powerful than the agricultural lobby. And they won. So the EPA came out very cautious. The mandates which it announced were pedestrian. They were not as bullish as the market was expecting. And the investors, the funds, had already loaded up. So the market was clearly overbought. On Wednesday, 23rd November, when finally the EPA announced its biofuel mandates, it was a damp squib. the scale of the sell-off that ensued after this terrible announcement surprised everyone, including myself. We never realized how much length the market had accumulated, and so much had to be thrown back into the market, had to be sold. For 7 continuous trading days, soya oil futures dropped. They dropped limit down the first day and kept dropping every day after that. And we lost 15 cents, or roughly 20% of the price over 7 days. And the premium that soya oil was commanding over palm oil narrowed considerably. Now, side by side with this drama in soybean oil, we had palm, which was watching these developments as a bystander, dropping a little bit, but not in the same proportion. And then the Indonesians, to shore up palm oil prices, came out with their announcement that the biodiesel mandate in Indonesia would be increased from 1st January from 30% to 35%, what they call B35. So the brief history of Indonesia in 2022 was first very high export levy and export tax, $550 a ton of export levy and export tax. Then came the imposition of the domestic mandate, the DMO, or domestic market obligation. Then came the export ban, and then slowly complicated relaxations leading to a huge buildup of stock in Indonesia. Side by side, there was a massive rise in the bulk sea freight as palm oil vessels moved to chemical cargoes because Indonesia banned the export of palm oil. And then, when wisdom prevailed, the Indonesian government removed the ban, removed the export levy, removed the export tax to encourage the export of palm oil. And there was a gradual recovery in exports. As exports recovered, the BMD recovered. And then, following the rally in soybean oil, as I told you, every day, almost a cent through October, early November, BMD futures also rallied all the way from 3,500 to 4,500. And then, in the last couple of days, corrected back to 3,800. That has been the story of palm oil so far this year. Now we come to the most interesting part that you have come to listen to, the outlook for palm for 2023. Now, it is very early at this stage to predict for the whole of next year. So I am only going to predict for the first half. In my opinion, in Malaysia, the labor shortage on plantations is now being eased. And it will be eased further with this new government which has come into office. So I expect 2023 production to be close to 19 million tons, as against my estimate for 2022 of 18.3 to 18.4 million tons, 500,000 tons more. Indonesian production, I think, will be up by 1.5 million tons. Not as much as normal, which is 2 to 3 million tons, only 1.5 million tons. And on the demand side, Indonesia will be going from January from B30 to B35, and then perhaps later even to B40. They have been doing test results on vehicles with B40, 40% biodiesel. So they will eventually go to that. Now, the result of this lower than expected production increase, good demand, increased mandates, Malaysian stocks will be drawn down until May 2023. That means until the end of Ramzan, Malaysian stocks will keep going down and will go below 2 million tons. I would say well below 2 million tons. Indonesian B35 program will keep stocks tight in the first half of 2023. And if we go to B40, they will get tighter. So as a result, I have turned my outlook and I am saying that I expect prices to trade between 3,500 and 5,000 ringgits unless the Ukraine war concludes. If the war concludes, all bets are off. But so long as the war continues and there is a tightness, there is a shortage of supply of sunflower oil from Ukraine and Russia, then prices will remain high. We now go from palm oil to rapeseed oil. There is, as you know, a big recovery in production of rapeseed and canola seed in 2022. Big recovery in production in Canada, Australia, and India. And very interestingly, canola oil in USA is cheaper than US produced soybean oil. And it also qualifies for all the incentives for being used into biodiesel. So it qualifies for what are called biodiesel RINs. So that means canola oil will be imported from Canada in the United States. Canola seed will be imported and crushed in the United States, and it will compete with soya oil. I've already spoken about the Indian mustard crop. It's going to be a lot better this year than last year. Soya. The Brazilian soya crop is humongous and looks very good. Weather is excellent. Plantings have been much higher, and we expect them to produce 155 million tons of soybeans next year. The new La Nina, the third La Nina, is expected to finish around January. So weather will be excellent after that. At present, the Argentine crop looks like it is facing a drought because of this third La Nina. But weather can improve if La Nina finishes in January, and we can still have a normal crop. We should keep our fingers crossed. On sunseed, there is now more certainty about the Black Sea export corridor. Both Russia and Ukraine need to export grain. They need to export wheat, sunseeds, barley, rapeseed. So this export corridor is likely to continue. It's much beyond expectation, much contrary to expectation. We thought the export corridor will shut after 19th of November, but no, it has been extended and it will continue to be extended. So my previous very bearish outlook was based on the Ukraine conflict ending by Christmas, but that is not the case anymore. However, sun oil shipments are steady and problems on sun oil shipment have eased. So that is a good factor for supply. As usual, we have to talk about the two biggest consumers of veg oils, China and India. China is still in the grip of a slowdown. The activity of China-based funds, remember Chinese funds are the most active investors in commodity markets all over the world. And the activity of China-based funds is enigmatic and surprises us from time to time, as it surprised us last week. But remember, China still has lockdowns. When China returns to normalcy, and when China returns to the world markets strongly, it will be bullish for oil markets. The only big question is, when will China return? We have to be on the lookout. That brings us to India. Indian rabi crops look good. Consumption growth in India has recovered and veg oil pipelines have been replenished. But India has imported far too much veg oils from August onwards. Imports in August, September, October, November have been off the charts, very high. So my question is, will consumption remain strong despite the high prices? Today, my answer is yes, because the Indian economy is doing well and likely to continue to do well next year. So here is my estimate of Indian imports for next year, 22-23, starting from November 22 to October 23. I think soya oil will go down slightly to 3.9 million tons. Palm will increase to 8.2 million tons. And sun oil will also increase to 2.1 million tons. Altogether, small increase. Remember, up to now, we were projecting decreases. We were saying imports would be less by 500,000 tons. But now we are saying no, consumption is going to be very good. Consumption per capita will be up by 5 to 6%. So as a result, consumption will go up and imports will remain steady. They will exceed last year slightly at 14.3 million tons, in my opinion. Now we come to summing up the world situation. World energy demand grew in 21-22 by only 1 million tons due to very high prices. 22-23, we project further increase in energy demand, renewable diesel, sustainable aviation fuel, biodiesel. Energy demand will be up because of capacity expansion by at least 2 million tons, could even be 2.5 million tons if Indonesia goes to B40. World food demand generally rises every year by 3 million tons. In 21-22, world food demand grew by 1.5 million tons because of high prices. Next year, 22-23, I expect world food demand will again expand by 3 million tons back to its original level. So, what is the net effect? 21-22, demand grew by 1 million tons for food, for energy, and 1.5 for food. 22-23, we expect energy demand up by 2 to 2.5, food demand 3 million tons. So total demand increases conservatively by 5 million tons. And here is my summary of what I call incremental supply and demand. So incremental supply, what is the increase of this year over next year, or this next year over this year? Soya oil up by 1.5, rape oil up by 2.2, palm oil up by 2.5. The other oils, rape and canola and sun oil, cancel each other out. So total supply is up by 6.2 million against total demand up by 5.5. In other words, almost in balance. Last year, supply was up by less than demand, which is why we saw very high prices in the world. Plus, supply was blocked in the Black Sea. It wasn't coming out. Again, 22-23, that is why I say the Ukraine war is so important. Because if the Ukraine war continues, the export corridor releases, it's only a safety valve. Small amounts of exports come out. But the bulk of the material remains blocked in southwest Russia and Ukraine. Last year, because of the ban, Indonesian supply did not come out. Now we expect Indonesian supply to be available. But in generally, overall, the scenario for 22-23 is rather bullish. Now, other factors also impact price. One of them is the US dollar. I believe the US dollar has peaked, but how quickly will it decline? When will the Fed signal that it is going to stop hiking interest rates? How bad will the recession turn out to be? And very importantly, when will the Ukraine war terminate and how? I have a few words to say about the Ukraine war because I find that analysts are not discussing the war in detail or honestly. They tend to sweep it under the carpet. This war has cast a huge, unexpected shadow on the world economy. If and when it ends, will that shadow be lifted or will it result in further chaos? And I will come to that in a minute. Analysts are ignoring and refusing to analyze the possible scenario in case this war ends. So here is my honest two-bit about what I think can happen, which people are not honestly discussing. Russia cannot possibly win this war. If they were going to win this war, they would have won the war in the first 1 week. After that, they are simply fighting, holding on. They have made no progress on any of their objectives, and their losses are catastrophic. So Russia cannot possibly win this war. Ukraine cannot afford to lose this war. Despite the colossal cost, they are fighting for their lives, for their independence, for their identity, for their culture. So the one big bang scenario is Russia losing the war. In any manner, we cannot foresee how they may lose the war, or they may disguise it in the form of a peace treaty, a settlement, or even call it a victory. But the fact is, the Russians will lose this war. That is a scenario that the world is not taking into account. And then the repercussions of that post the Ukraine war. Will the Russian people accept such a dismal end to the war and celebrate their president? Or will the Russian people be very upset, and that will lead to chaos and economic turmoil in Russia? You know what happened when President Yeltsin stepped down and the Soviet Union broke up? And how will that affect the world economy? I am not indulging in scaremongering, but such an outcome needs to be honestly discussed and analyzed and not swept under the carpet, as seems to be the tendency to do in India. So I am not going to speculate further, and I have set the cat amongst the pigeons. Discussion can happen later. My price outlook is that I expect palm futures on the BMD third month to trade between 3,500 and 5,000 between now and the end of May. Soya oil will compete with palm oil, but only after May. And that too, if Argentina is able to produce oil, and that oil, because of better weather, and exerts a pressure. And we must remember, the Brazilian biodiesel mandate remains an enigma. It could be triggered. On lauric oils, my views are roughly the same as last time. Lauric oils are much more linked to economic growth, and prices should remain around $1,000 to $1,200 CIF Rotterdam. And coconut oil should begin to regain its premium over palm kernel oil. So, ladies and gentlemen, in conclusion, the factors of influence for next year will be Ukraine war, interest rates, recession, US dollar strength, and of course, weather. 22 was a seesaw year, high, low, volatility. 2023 may not be such a seesaw year as 2022. And with those words, good luck and God bless. So,